Hey everyone, and welcome to our deep dive into Apple Inc.
Apple.
You know it, it's February 24th, 2025, and we're looking at whether or not their stock is still a good buy.
Good question.
Well, we've got two great sources to help us out today. First, we've got an in-depth financial analysis document.
Always a good place to start.
Then we'll be checking out this recent CNN article all about some major investments Apple's making here in the U.S.
Oh yeah, that $500 billion investment.
You got it.
It's a bold move. Dropping that much cash on U.S. facilities over the next 4 years, that's a big statement.
Huge. And especially when you consider that Apple's already one of the most valuable companies globally.
Oh, absolutely.
I mean, their market cap is enormous. We're talking $3.72 trillion.
Wow.
We all know about their products, too, the iPhone, the Mac, all that.
Right, the classics.
But their services segment, that's what's really interesting, and that's where they're seeing so much growth.
You're talking Apple Music, Apple TV Plus, iCloud, the App Store, that whole ecosystem.
It's amazing what they've built.
It really is. They've gone from selling you a phone to selling you a whole way of life. Pretty smart, if you ask me.
Totally. But let's dive into their financials, because ultimately we want to know if Apple stock is still a good investment, right?
Right, exactly. Let's get down to business.
So our analysis shows that their revenue growth has actually slowed a little bit. It's down to about 2.61% year over year.
That might seem a little worrying, but you have to remember the scale at which Apple operates.
That's a good point.
Even small percentage increases for them translate into billions of dollars.
True, true. Plus, their profitability is still incredible.
Oh, yeah, they're a profit machine.
We're talking a gross margin of around 46.52%. So that's their profit on each product after manufacturing costs. And even when you factor in all their operating expenses, their operating margin is still a huge 31.76%.
Amazing.
And then there's their net income, which is their actual profit after all expenses are taken out.
Okay, what's the damage?
Well, it's not damage, it's profit, and it sits at a massive $96.15 billion.
Wow. But you know what really stood out to me?
What's that?
Their return on equity, or ROE,
Okay.
it's sitting at a whopping 136.52%.
Okay, break that down for me. What does a high ROE actually tell us about Apple?
Well, it means they're extremely efficient at using their shareholders' money to generate profits. Basically, for every dollar invested in Apple, they're generating $1.36 in profit.
Wow. And why is that?
Well, part of it is their brand loyalty.
Okay, makes sense.
People love Apple products and are willing to pay a premium for them, but they're also incredibly efficient with their assets. Think factories, stores, all of that. They're squeezing every drop of value out of them.
I see. So they're making a ton of money, and they're really good at using that money to make even more money. No wonder they have such a high free cash flow.
Exactly, almost $98.30 billion.
It's incredible. That gives them so much flexibility. They can put money back into research and development, buy up promising companies, strategic acquisitions,
Right.
And they still have plenty left over to give back to their shareholders through dividends or stock buybacks.
All of that makes Apple extremely attractive to investors.
No doubt. But that leads us to the next big question.
Okay, hit me.
Is Apple overvalued? Their stock is currently trading at $245.55 a share, and their price-to-earnings ratio, or PE ratio, is 38.99.
Okay.
That's significantly higher than their historical averages.
So let's unpack that PE ratio for a second. Imagine you're buying a little lemonade stand, right?
Okay.
If that stand earns $100 a year and you pay $1,000 for it, that's a PE ratio of 10.
I see.
You're essentially paying 10 times its annual earnings. Now, with Apple, you're paying almost 40 times their earnings per share.
Right.
It's a high price tag, but it also reflects high expectations for future growth.
Right. But is that growth guaranteed?
Good question.
Their forward PE, which factors in their projected earnings, is a bit lower. It's 32.47, but it still points to some pretty optimistic projections. And then there's their PA ratio, which considers their projected growth rate. That sits at 3.42. And that's a bit of a red flag for some people.
Yeah, definitely something to think about. A PAG ratio above 1 suggests that the stock might be overvalued compared to its expected growth rate.
So the valuation, it's a bit of a puzzle. They have these stellar financials, but investors are paying a premium for that success.
It's a delicate balancing act, and this is where that CNN article about Apple's $500 billion investment in the U.S. gets really interesting.
Right, this massive investment. It seems at least partially driven by those possible tariffs on imports from China.
Remember when President Trump first announced those tariffs? Well, now he's connecting them to Apple's decision to invest in the U.S. So there's a whole political layer to this story, which makes things even more complicated.
For sure. And then you've got Apple CEO Tim Cook emphasizing their commitment to American innovation in his statements.
Yeah, smart move.
It's a good way to frame this, right?
Absolutely.
But the CNN article also suggests that there's more to this story than just trying to avoid those tariffs.
Exactly. Apple's been quietly diversifying its supply chain for a while now, particularly after the pandemic.
Right, because remember all those production issues they had in China during the pandemic.
Exactly. It highlighted how risky it is to rely too heavily on one location for your production.
Right, and it's not just Apple. Think about TSMC.
Oh, right, Apple's main chip supplier.
They opened a plant in Arizona,
Yeah.
and that's part of a bigger push, right, to bring chip manufacturing back to the U.S.
And Apple's $500 billion investment, it's not just hardware either. They're expanding data centers across different states, putting money into corporate facilities, even producing Apple TV Plus shows in 20 different states.
Wow, so it's like they're weaving themselves into the fabric of the American economy. So is this all just a reaction to tariffs, or is there something more strategic going on here?
That's the big question, isn't it?
It is. We'll dig deeper into that in just a bit, but first let's take a quick pause. Okay, so we're back, and just before the break, we were in the middle of discussing Apple's huge investment in the U.S.
Yeah, it's definitely a big move. And the implications of this could be felt way beyond just Apple.
Right, like for the whole U.S. tech industry, even globally.
Exactly. To really grasp what this investment means, you have to look at the bigger picture.
Okay, help me out here.
Well, we've got rising geopolitical tensions in the world, especially between the U.S. and China.
And that creates a ton of uncertainty for any global company, but especially one like Apple, right?
Right. Think about it. Apple relies so much on global supply chains.
Yeah, they do.
And then on top of all that, you've got the pandemic.
Oh, of course, which really showed how vulnerable companies are when they depend so much on a single location for all their production.
Exactly. Do you remember a few years back when there were all those chip shortages?
I do. It was rough.
I mean, everything was delayed.
Yeah, cars, gaming consoles, it was wild,
And that was a huge wake-up call for a lot of companies.
including Apple.
Yeah, for sure. So diversifying their supply chain, it makes total sense from a risk management perspective, right?
Of course. I mean, if they spread out their production, they're less exposed to problems if something happens in one place.
Exactly. But it's not just about protecting themselves from risk. This is also a strategic opportunity for them.
Okay, I'm listening.
The U.S. is trying hard to bring manufacturing back, especially high-tech manufacturing like semiconductors.
Right, like with the CHIPS Act.
Right, and that gives companies incentives to build chip factories in the U.S.
Interesting. So Apple investing in the U.S. could mean they get some of those incentives.
It's a possibility. They could also reduce their taxes and maybe even get some goodwill with U.S. policymakers.
So it's a smart business move, not just about politics.
Absolutely. And it lets Apple present themselves as a patriotic company, supporting American jobs and innovation.
Yeah, that American innovation angle they're pushing, it's powerful stuff.
Right, especially when you consider how competitive the tech world is.
Yeah, it could really give them an edge.
Totally. And don't forget about the advantages of being closer to their U.S. customers.
Oh, right, things like faster delivery and maybe even better customer service.
Maybe even the chance to make products specifically for the U.S. market.
So this is a pretty complex strategy.
Way more nuanced than just trying to get around some tariffs.
Right, this is Apple making a long-term bet on the U.S.
Yeah, a calculated decision that could have huge rewards.
But even with all these potential benefits, we can't forget about the risks, can we?
Oh, absolutely. And the risks are definitely big. This is a $500 billion investment.
Yeah, it's a massive amount of money. It's going to take time to see if it pays off.
Right. And there's no guarantee that these new facilities will be as efficient as their factories in China.
Yeah, it's not easy to just pick up and move everything.
They're starting from nothing. New factories, new workers who need training, and new regulations to figure out.
And they have to maintain the same level of quality that Apple is known for.
Exactly. And don't forget those geopolitical tensions we talked about earlier.
Oh, right. What happens if the U.S. and China's relationship gets even worse?
That's the big unknown. Apple could get caught in the middle of that.
They could end up facing restrictions on trading or even struggle to get the parts they need.
Exactly. And global supply chains are super complex.
Yeah, they are.
Disruptions anywhere in the world could impact Apple.
Not just in China.
Right. So yeah, there are definitely risks.
But Apple has a pretty good track record of figuring things out, right?
They do. They seem confident that they can handle these risks.
They're weighing the potential benefits against the downsides,
They're playing the long game.
betting that this will keep them at the top of the tech world.
Right. It's really fascinating to see how all this plays out. But let's think about you, the listener, for a minute.
Okay.
You're trying to decide if you should invest in Apple, right?
That's the big question for a lot of people.
So what should you be thinking about with all this information?
I mean, first you have to think about your time frame. Are you looking for a quick profit, or are you planning to hold on to this stock for a long time?
Yeah, because this move Apple's making, it's clearly a long-term strategy.
Exactly. They're building for the future, but that doesn't mean their stock price will go up immediately.
Right. There could be some bumps along the way, maybe even some dips.
But if this all works out, the potential long-term payoff could be huge.
Exactly. But you also have to be honest with yourself about how much risk you're willing to take.
Right. It's about your risk tolerance.
Are you okay with investing in a company facing these geopolitical issues and possible government scrutiny?
I mean, those are things that could definitely impact Apple's performance in the years to come.
Right. And lastly, you have to think about your own personal investment goals.
What are you hoping to achieve?
Does Apple, with its current stock price and its future potential, fit into your overall plan?
It's a personal decision. There's no right or wrong answer here.
Exactly. It's all about what makes sense for you.
And hopefully, this deep dive has given you all the info you need to make a smart decision.
Maybe it's even got you thinking about doing some more research on your own.
Yeah, because that's what this is all about, right? Asking the right questions, being curious, and learning more about how to be a better investor.
And that makes us human, that desire to understand the world, even something as complicated as a global tech giant like Apple.
I love that. So we've talked about a lot from their financials to their strategies and even global politics.
But there are a few key takeaways I want to make sure we hit before we wrap up.
Yeah, let's do it.
Ready for the final push?
Absolutely, let's do it.
Okay, first things first. Apple is still a financial powerhouse. Their revenue growth might be a little slower, but remember, they're operating at a massive scale, and they're still incredibly profitable, just generating mountains of cash.
Right, which leads us to our second takeaway. Their valuation. There's no question it's high.
Yeah, investors are definitely paying a premium for that Apple stock.
But that doesn't automatically mean it's a bad investment.
No, not at all. It comes down to their long-term growth potential. If they can pull off this U.S. investment, handle those global challenges, and keep innovating.
Then maybe that high valuation is justified.
Exactly. Which brings us to takeaway number 3. Apple's got some serious challenges. Geopolitics, government regulations, those shifting global supply chains. It's a lot.
Yeah, but they've dealt with obstacles before.
Right, and they aren't afraid to make big moves.
They're adapting, which is key in the tech world.
Absolutely. It's a fast-paced industry. You got to keep moving. And that leads us to our final takeaway. Apple is at a crossroads. The choices they're making now, like this U.S. investment, will have a ripple effect for years to come.
It's a gamble on the future for sure.
It'll be so interesting to watch how it plays out, not just for Apple, but for the whole tech industry.
For the U.S. economy, even the global balance of power.
Big stuff. So remember at the beginning of this deep dive, we asked, would you buy Apple stock right now, knowing what we know? Well, now you have to answer that question.
Right, because only you can make that decision.
We've gone through their financials, the opportunities, the risks, their strategy.
And now you have to weigh all that against your own investment goals and your risk tolerance.
And what you think the future holds.
But hopefully our deep dive gave you a fresh perspective on Apple, sparked some curiosity.
And maybe even inspired you to do some digging on your own.
Yeah, because that's what it's all about. Asking questions, learning, and becoming a better investor.
That's what it's all about.
We'll leave you with one final thought to think about. Apple's betting big on America, but is America betting big on Apple? How will that relationship change in the next few years, and what will it mean for tech, for innovation, for the global economy? Until next time, keep diving deep.